Welcome to Real Estate Explained. I'm Nick Bush, a Fredericksburg area realtor, and this podcast is focused on helping you make smarter real estate decisions right here in Fredericksburg, Virginia. Each week, we break down what's actually happening in the local market, talk through what it's like to live in Fredericksburg, and answer the real questions buyers, sellers, and investors are asking without hype, headlines, or guesswork. If you're buying, selling, investing, or just trying to understand the market better, you're in the right place. Let's get into it. One of the biggest challenges I'm seeing with homeowners right now isn't whether they want to move. It's figuring out how to do it without feeling stuck in the middle. A lot of people would like to sell their current home and move into something that better fits their life, but they're worried about timing. They're worried about selling before they buy, buying before they sell, and what happens if those timelines don't line up perfectly. That uncertainty keeps a lot of homeowners in place longer than they actually need or want to be. So today, I want to bring in someone who helps homeowners navigate that exact situation from the financial side. I'm joined again by Karl, a local mortgage lender here in our market who works with homeowners every day to help them understand their opinions, their options when they're thinking about selling and buying at the same time. In this episode, we're going to talk about tools like bridge loans, rent back agreements, and how homeowners can plan ahead so they can move with confidence instead of stress. Karl, welcome back to the show.
Thanks for having me. What a blessing.
And in case someone didn't listen to the episode prior, reintroduce yourself to the people.
Local lender, been doing home loans for about 10 years. I'm not good at anything else. And now I really like making a difference.
Okay, that's great, man. I love how you say you're not good at anything else, because I feel like that about being a real estate agent. I'm like, this is all I'm good at. This is why I do it, you know?
Stay in my lane.
So many homeowners feel stuck right now. We hear the term golden handcuffs all the time, right? And so they want to sell. And I think the other reason they're stuck is because they don't understand how to sell and buy at the same time. So from your perspective, like, why is that such a concern today?
I think it really comes down to a lot of people having this idea in their head that if you do have an interest rate, let's say sub 4, that it would be financially irresponsible for you to sell your current place with a low interest rate and move your family into a different home at a higher interest rate, when you're likely sitting on a large amount of equity that could put you in a position where it's not only a marginal difference on what your outgoing monthly expenses for your housing, but also assuming that it's a move up situation, you're buying a more valuable asset, you're leveraging a higher priced home, which is going to appreciate more over time. My team has built a cool move up calculator for this that we can demonstrate, what's the difference long term on wealth creation.
Yeah.
Really cool.
So let's talk about that. So you want to be known as the bridge loan guy. Mm-hmm. And so we're going to talk about what a bridge loan is, but just tell people, like, what is a move-up buyer from a lender's perspective, and then just talk about this calculator that you just mentioned also.
Yeah. So move-up buyer, you're buying a house that has a higher value than your current home.
Okay.
The calculator helps us evaluate, okay, what's your current financial position on your current home? Okay, how much is your current home worth? Takes into account what average annual appreciation is on that home, what your average costs are to that home. And then we model out a new purchase. What's the value, average appreciation, which if you're buying in the same market, that's going to be the same, right? And what's your total outgoing expense for that home? And then it totals everything up over, let's say, you're going to live in there for 15, 20 years, right? If you're going to move up, right? Where are you going to be from a wealth creation standpoint over the longevity? Most of the time, even with a higher interest rate on the new purchase, you're going to have a higher net worth because you're leveraging a more expensive asset.
Yeah. So almost the asset will cost more. So it's going to appreciate at a even the same clip, but it'll be more valuable at the end of the day.
Right. Because 4% on $1 million is more than 4% on 500,000.
Yeah, exactly. That's actually a really intelligent way to think about it. So financially, right? Like, I think when people think about buying, the conversations I'm having with homeowners that are thinking about like buying before selling, they're just like, well, I don't want to be homeless in the meantime. Like, they're almost afraid of buying the next house first. So how do we bridge the gap to make sure that, so I have a way that I do it, but how do you bridge the gap from a financing standpoint to make sure that people don't have to be homeless, even if their house doesn't sell quickly?
Yeah. So when you already own a home and you're going to buy a new place, there's 3 ways to set up the transaction. You find, it depends on whether you have your house listed first or buy the new place first, right? So you could set it up where you sell your place, do a rent back, negotiate that with your agent where you can still live in the house for 30 or 60 days and give you time to be able to close on the new home after you've already sold your existing home. You can set it up in a way where you essentially you're selling your place first or at the same time, right? Simultaneous. So you get it, your house listed, you find the perfect house right away, close on the same day. Or the third scenario is probably the easiest and smoothest is if we can leverage bridge financing.
Interesting.
And the way that that's going to be the easiest is you're going to be able to move at your own pace where you essentially find your place first before you're selling your current home. The way that the bridge financing is going to be valuable to you is it pays off your existing loan. So you don't have any mortgage payments. The loan's good for 12 months. So you have ample amount of time. You don't have to worry about, oh, well, what if it takes me 3 months to find a house and then 3 months to sell my house? No big deal, right? You can also consolidate other debt with the bridge loan, car loans, student loans, credit cards. Most people don't want to pay off their student loans. But that's at your discretion. And then you can get money back to spruce up the place after you move into the new home, or for repairs on the new home. If you have, certain things that aren't exactly as you imagine them on the new house, like everything's there, but it's missing that one piece. Well, take some extra money out of the bridge loan to get that one extra piece. But the agents I've worked with on bridge financing really like being able to hold some money back to be able to get new paint, new carpet and stuff in the home. And most agents will tell buyers and sellers that it's going to be easier to sell your home when you're not living in it.
Yeah.
Because then there's no restrictions on showings and it's usually more marketable because it's, either completely vacant or has staging furniture and it's just presented in a better way, right?
Okay, so this sounds like a no-brainer, easy, sweet, what's the term? Like too good to be true type deal. So you're like, hey, you can buy your next house and not have to sell your current house for 12 months, before, with the bridge loan, right? So I guess the question I have here is like, how is that possible? Like, how is that possible? And what if they decide not to sell and they decide to rent? What if they get cold feet on the sale or it doesn't sell? So let's answer that one first.
Yeah, I guess you gave me two. There are closing costs with the bridge loan. They're fairly marginal though, because there are all these regulations in place.
And are those closing costs that can be paid by the seller on the buy side transaction, or are these costs that the move up buyers have to take care of?
We can structure it that way where it's negotiable through credits, through the transaction on either side, right? But it would be built into the bridge loan, right? So it's going to come out of what would be your proceeds of your sale. But because of all the regulations in place that protect consumers on what lenders can charge, there's really no profitability for a lender in a bridge loan. The lender doesn't make money on the bridge loan. The money is made by using the bridge loan as a vehicle to help you be able to do the new purchase loan.
Yeah.
Right. No lender's going to, unless it's a hard money lender, like no traditional lender is going to give you a bridge loan without giving you a new purchase mortgage on your new house. Because that's where the lender is going to make the money, is on the purchase mortgage, not on the bridge. What was the second question?
The second question was, what happens if you can't sell your house?
Yeah, the exit. So that's super easy. Essentially, we could convert the bridge into a new, like long-term financing investor loan. It'd be essentially treated as a refinance.
Okay.
So we'd refinance it into either a traditional investor loan or a no income verification investor loan. Okay. That's easy. But, depending on what your numbers are, how much you took the bridge out for would impact, doesn't make sense from a cash flow perspective. But there are permanent financing ways to exit that bridge.
And then let's just use $100,000 because that's a simple, easy number. So if someone has $100,000 that they could pull in equity to buy their second house, like how much could they expect from like a cost standpoint on that $100,000 to do the bridge? Is it like 5%?
1% to 2%.
Oh, that's cheap.
Yeah.
That's actually like a sweet deal. Yeah, to have no stress and be able to move into your next house. And then you said that you can use it for debt consolidation. So what it sounds like to me is like you just access that $100,000 and leverage it how you want, or do you have to put a certain amount down from that $100,000 for the purchase of your next house?
It depends on what you qualify on the new purchase.
Yeah.
Right. Like if you have enough income to qualify for, like, let's just say, 5% down conventional or 3.5% down FHA, then, the same minimum down payment component requirements would apply on the new purchase from the bridge, and the rest can go either, towards debt consolidation or towards, fixing up the house or just cash in your pocket.
So essentially, if I have $100,000, I'm putting 10% down on a $500,000, and so I have my down payments $50,000. Mm-hmm. That other $50,000 is available for me at my discretion, which is actually really good because debt consolidation might be one of the things you have to do to make that next home affordable, right? So you might have to pay off a credit card, you might have to pay off a car loan or something like that, and so to have those extra funds available is pretty sweet. It almost sounds like a cash out refi, except you're buying a new house with it, and you can kind of clean up your financial situation.
100%. Yeah, it's a cash out loan that's on short-term financing. But it also works for experienced investors. Like, there's another type of bridge that you can do as a long-term financing where you don't need to do an exit loan. It's a 30-year adjustable rate mortgage that you can cross-collateralize multiple properties. Mm-hmm. So let's just say you have an experienced investor that's low on cash. Equity rich, cash poor. But they have another property that they want to buy, whether it's primary or investment or whatever, right? So let's just say that they own two properties, really strong equity position. We could give them what's called a cross-collateral bridge on those two properties and the one that they're buying. And if the numbers are really good, they bring no money to closing.
Oh, that's sweet. Yeah. So since you have this bridge loan option, so I usually like the rent back. And so to explain the rent back, what a rent back is seller sells their house, and in Virginia, you can get a rent back for up to 59 days, which just means that you're renting the house back from the buyer who you just sold your house to, and then you have time to go find a house. I typically tell my sellers who are now move-up buyers that really you have like a 90-day window, because you go under contract on the house you're selling, takes on average 30 days to close on that house. And then so you have that initial 30 days to go shopping and get under contract, and then, potentially close before that window. So I like the rent back. I think it's really smooth and simple to understand, but and it doesn't cost 1% to 2%, which I personally think is minimal for the convenience and the leverage that this bridge loan you're explaining gives you. And you can easily get that 1% to 2% back in a home that's totally vacant that you can stage and pay and update if you need to. You can make that money back on the sell side long term.
Yeah, sell the house for more because of the leverage that the bridge loan gave you. But I love the rent back, and I love the simultaneous close because
that's so hard to do, though.
Right? Yeah. The simultaneous close is like your dream scenario. I've done plenty of them, but much less of those than the rent backs. Rent backs are the most common. But the biggest objection that the bridge loan has solved for me and my clients is, well, what if I don't find the perfect place in 60 days, right? Like, you're at the mercy of whatever inventory is available in the locations that you're looking at, right? So usually in those conversations, it's more of, hey, I don't want to settle. I don't want to settle for whatever's there because
I only have this amount of time. Yeah.
So you just being able to have a lot more like time on your side and not have to make rush decisions, not have to settle. That's really overcome those objections for a lot of my folks.
So why do you think the rent back is more popular than the bridge loan? Like, why are people not utilizing this?
Because the bridge loan that I described is a bridge loan that most people don't have.
So you got that exclusive.
Well, a couple people have it, but the standard bridge loan is due and payable in either 3 or 4 months. It doesn't let you consolidate debt. It doesn't let you take cash out. It's not versatile, and because it's not versatile, it brings like no value.
Yeah.
It's literally just for you to be able to move equity over from your current house to the new house. But again, Standard Bridge doesn't allow you to make an offer on the new house non-contingent and contingent on selling your place, right? And that's the real value of the bridge loan, is you being able to make an offer to a seller saying, hey, I don't need to do anything with my current home. I'm going to close on this house regardless of what I do with my current home. Whereas a Standard Bridge doesn't provide that for you, which makes the product really invaluable. Or unvaluable?
Invaluable.
Yeah.
Invaluable.
So the cross collateral bridge is what's going to provide you all those points that we were talking about in the very beginning that are going to make it valuable.
And are you just traditionally qualifying a buyer for the next house? Like, are there any other, do they have to be 760 credit score? Can they kind of be, mid 6 credit score? Or,
That's a good question.
Yeah.
The minimum for the cross collateral bridge is a 680.
Okay, that's good.
But they do make some exceptions here and there. I had one guy that owned his house free and clear. He had just started his own business. So like income was low on paper, right? But he had like a 665 credit score, and I got an exception for the credit score for him to use the cross collateral bridge. So it just depends on what your financial circumstances.
But you don't have to have like a perfect financial profile.
No, but there is also another one that I've used before that goes as low as a 620 credit score. It works in a similar way, but it's not as advantageous. So like, it's not my first choice. It's a backup option. Like, because, I said a couple people have it. I got 2 different lenders that'll do it. The best one is with the 680. The other one is down to 620.
And so that's it. So I do have one more question about the bridge. Is that like, is there a time where it doesn't make sense to do it?
Well, it doesn't make sense if you can qualify without it. And you're not worried about the stress of paying 2 mortgages.
Yeah.
Right? Because then you're going to save the money on the closing costs, right?
Yeah.
Like, so if you have somebody that makes a bunch of money and they're able to qualify for their new mortgage with their existing mortgage, and they're not worried about having to pay 2 mortgages for, maybe 2 months or whatever. Worst case scenario most of the time, right? Because you don't make a mortgage payment on your new house the first month.
Yeah.
So, assuming 90 days to sell your current place, then, you have 2 months of double house payment. Then, essentially we'd have to do the math. It's like, well, how much is that going to cost you in mortgage payments on your departure home compared to the cost of doing the bridge? How much is the difference, right?
Yeah, and then like we said, you can potentially get those percentage points back if you can update your house a little bit using the funds from the bridge, if you have some left over, to upgrade your house and make it the cream of the crop property on the market. What's the difference between like a move-up buyer conversation and a first-time home buyer conversation? Not like, obviously, this first-time home buyer has never purchased, so they have a ton of questions. But from a mindset point of view, like, what are first-time home buyers like talking about versus what the traditional move-up buyer is talking about? And what do move-up buyers need to be thinking about when they're beginning the process of getting finance for that next home? Yeah,
I enjoy both conversations, but I think the move-up buyer conversation is a little bit more high level, which I get. I'm a nerd, so the more high level the conversation is, the more I nerd out on it. The first-time home buyers, they're just trying to get their feet and figure out what are the different programs, what are the pros and cons of the different programs. Move up, they've already been through it before, so they kind of have a good understanding of what the different programs are on the purchase loan, right? But the conversation really becomes, again, it all comes down to me gathering information, taking inventory of like what your financial situation is. So that way we know what we have that we can leverage, right? Before I started using the cross collateral bridge loan that has all those different value adds, I always would talk to people about how like, well, if you have some money that you either in checking, savings, stocks, bonds, or a 401k that you can leverage as down payment on the new purchase, I'd always tell them, hey, you could always turn around after you sell your place, take the equity out of your place, throw it into the new place, and do what's called a recast. And a recast is essentially a reset of your mortgage payments based on the new lower balance of your loan. So example, like if you bought a house for, you got a loan amount of $500,000, and then you got 200,000 from selling your place, and threw that 200,000 at the 500,000. You only owed 300,000. Well, they redo your payments as if you took out the loan at 300,000.
Yeah.
Right. So it's a good way for you to be able to reduce your monthly payments without any costs, without having to refinance. Interest rate and everything stays the same, right? So, you know, that was always my big conversation for move-up buyers. But now it's like, okay, well, you know, now that I've seen firsthand how much value the cross-collateral bridge brings, you know, I want to talk to them about that as a backup, right? That's not the first choice, right? The cross-collateral bridge is a valuable resource if you find the home that you want to buy before you've listed your home for sale.
Yeah.
If you've listed your home for sale and you have a lot of activity, well then, you know, it sounds like you don't need it, right?
Yeah.
But you don't know until you actually get a little bit further into the process. And by having you already approved for that as a backup option, we want to be able to whip that out, you know, if you find yourself in that situation where it's needed.
Do you find that there's a like a percentage of equity or a number of, hey, I have X amount of equity, now I'm going to move up? Do you ever find that to be, you know, common at all?
I don't think it has anything to do with equity. I think it has everything to do with life events.
Yeah.
You know?
All the D's.
Yeah.
Someone told me, you know, we used to see death, diapers, divorce.
Yeah.
But another guy I was on the phone with, he goes, death, diapers, stress. He had like 6 of them. And I was like,
I think there's 7. I can't remember all of them.
Yeah.
I can call my guy after this and figure out what the other ones were. But
I think this makes so much sense, man. And my last question, could you use this to do a construction perm? Or to build, you know, so the construction permanent loan, and you can explain that is if you're buying land and you build and you can finance that entire process. I want you to explain it from a lender's perspective. But could you use this to build a house, or do you have to buy a new one? Because you could build a house within, you know, 6 to 9 months and then put your house on the market.
you could. I personally haven't done it before, so I'd love to do one.
Look at that.
Yeah, you're thinking outside the box.
I'm outside the box guy.
It's for your deal. But yeah, no, it would just all come down to timing, right? We would need to make sure that the builder is going to be able to hit the time frame on the bridge.
Okay.
Yeah.
I mean, I think we've crushed it on the bridge. I don't think we need to go down a rabbit hole. And like, I think you have 2 options as a seller, right? Like, I think these are the takeaways that sellers should have from this episode, right? Is like, figure out why you're moving up, right? Talk to your real estate agent. Understand what the value of your property is. And not only the value from an equity standpoint, but also you want to know what buyer behavior is at that current moment, what the market is doing, right? So you can basically know, if I sell my house, this is what's going to happen, not just this is what my home is listed for. And then we connect them with Karl, and he gets you pre-approved for your next house, right? And you can consider, okay, is this a bridge loan situation, or should I do the rent back? And I think the bridge loan is cool because you have more flexibility to find the house that you really love. And most people that are moving up are, in my experience, are trying to move up to their, like, quote unquote forever home that they're going to raise their family in, right? So I think it's really dope. But if a homeowner's thinking about moving in the next like 1 to 2 years, what do you think they should be thinking about and planning for?
I think it depends on, like, what's your pain point, right? Like, if you're going to move in the next couple of years, is it because, you know, you need more space, you want to be in a different location, or do you need less space, right? So, I mean, all that stuff is going to drive your decision making, and that's going to drive like what our price point is going to be for the new house, right? It's kind of hard to prepare if we don't have a good idea of where you're going to be on price point for the new place, which is obviously that's going to change, right? But like, you know, there's one couple that I talked to a month ago about different bridge financing, and they thought they were going to end up, their current house was worth like $1 million. They thought they were going to end up at like 1.5. They ended up under contract on a house at 1.8.
Oh, wow.
So like it worked, but how we structured the bridge for them was considerably different than how we initially mapped it out in our first conversations, because they ended up at a $300,000 higher house price, right? You know, so thankfully, like, everything works for them from a finance standpoint, but you're obviously going to, in a $300,000 swing, you're going to be in a situation where the numbers are going to look drastically different. And it's better to be able to be more prepared from a budget standpoint, what that's going to look like. Because for them, that they essentially they have to absorb the difference on the new monthly payment on the new place because the equity in their current home didn't change.
Yeah,
right?
Exactly. All right, man. Any last words for sellers at all?
For sellers? Well, I'm here to hijack the podcast. So my last words for sellers are also for the listing agents, where it's like lenders don't just help you with your buyers. Lenders help you with your sellers.
Okay.
And that's really the whole takeaway from the bridge conversation.
Yeah.
Is how we can bring value on the other side of the transaction. Everybody in mortgage lending is always focused on buyers because that's who our direct client is, right? We lend to the buyer, but buyers in these situations move up their sellers too, right?
Yeah.
So we really need to wear a different hat and help on the sell side because it's hard for you to map out what the future buy is if we're not helping on the sale side.
Shout out to my move-up buyers and downsizers. That's who I specialize in working with. All right, man, thanks for joining me. Tell the people where they can find you and reach out if they want a bridge loan or buy or just talk about, getting pre-approved for their next house.
Yeah, text me Bridge at 804-665-4344.
And we're going to shout out the Richmond zip code, Cap City in Virginia, area code. I said zip code. We're going to shout out the Richmond area code, Cap City, Virginia. We started this whole country. Let's get it. Thanks, bro.
Thanks for having me.
This was a really helpful conversation because I think one of the biggest things homeowners don't realize right now is that they actually have more options than they think when it comes to moving. A lot of people feel stuck because they assume they have to perfectly time selling their current home and buying their next one. And that's simply not true. With the right planning, the right financing strategy, and the right guidance, homeowners can move in a way that feels smooth, controlled, and much less stressful than they imagined. And the biggest takeaway from this conversation is that planning early makes all the difference. If you're a homeowner in Fredericksburg and you're even thinking about moving in the next 1 to 3 years, that's the right time to start having these conversations. You don't have to be ready to list tomorrow. You just need clarity on your options so you can make a confident decision when the timing is right. If you'd like to talk through your situation, you can reach out at any time. Email me at nick@thekobecompany.com, DM me on Instagram at Nick Bush the Realtor, or check out my website, thekobecompany.com, for resources and tools. Until next episode.